Is crypto about to explode? Could July be the spark that ignites the biggest bull run since 2021? Right now, the markets are buzzing with anticipation. Bitcoin has surged past $108,000, and with momentum building, investors everywhere are asking, is this the moment we've been waiting for? In the next few minutes, we'll break down the powerful 4-year cycle that has defined crypto history, analyze the latest data, and highlight the major events that could launch Bitcoin past the elusive $100,000 mark. Whether you're a seasoned investor or just getting started, understanding these cycles and strategies could mean the difference between catching the next wave and being left behind. To understand where crypto might be headed, it's essential to look back at where it's been. Bitcoin, and by extension the broader crypto market, has followed a remarkably consistent 4-year cycle. This cycle is driven primarily by the halving event, which happens approximately every 4 years and cuts the reward for mining new Bitcoin in half. This reduction in supply has often triggered a surge in price as scarcity meets growing demand. Let's rewind to 2013. Bitcoin experienced its first massive bull run, catapulting from obscurity into the headlines. Prices soared, fortunes were made, but as is often the case with rapid climbs, a sharp correction followed. The market cooled, and many declared the end of crypto's wild ride. But those who paid close attention noticed a pattern, the beginnings of a cycle that would repeat itself. Fast forward to 2017. Once again, Bitcoin went parabolic. Prices skyrocketed, drawing in new investors from around the world. The media buzz grew louder with each new all-time high. But euphoria eventually gave way to reality. A crash ensued, wiping out speculative gains and leaving only the most resilient investors standing. Then came 2021. This time, the cycle had matured. Bitcoin experienced a double top, 2 distinct peaks, followed by a long period of sideways consolidation. Instead of a single explosive rally, the market saw a more complex pattern, reflecting the growing influence of institutional investors and the increasing complexity of the crypto ecosystem. Now, here we are in 2025. The most recent halving took place in April, slashing new Bitcoin issuance and setting the stage for the next phase. If history is any guide, the post-halving setup we're seeing now could be the launchpad for the next major move. Charts from each cycle reveal a consistent pattern. Every bull market begins not with fireworks, but with a long, quiet phase of sideways movement. It's during these periods, when enthusiasm is low and attention fades, that the foundations for the next surge are quietly being laid. So why could July be the turning point this time around? There's a compelling mix of historical precedent, market sentiment, and macroeconomic forces converging right now. Let's start with the calendar. Historical data shows that July has often been a breakout month for risk assets, including both traditional stocks and cryptocurrencies. Over the past decade, the S&P 500, the benchmark for the U.S. stock market, has risen every July without fail. When traditional markets are strong, that sentiment tends to spill over into crypto. Investors feel more confident, liquidity increases, and the appetite for risk grows. But it's not just about seasonality. Market psychology plays a crucial role here. After months of consolidation and uncertainty, investors are hungry for a narrative shift. When price breaks out of a range, it often triggers a wave of FOMO, fear of missing out, drawing in sidelined capital and amplifying the move. This combination of seasonality and psychology creates a powerful feedback loop, driving prices higher as more participants jump in. Now let's turn to the technical charts for a closer look. Are we seeing the same early signals that preceded previous bull runs? Analysts are pointing to several key indicators that suggest a local bottom may have formed at the end of June or the very start of July. First, the current pattern of sideways consolidation closely mirrors what we saw in both 2017 and 2021. In each of those years, a long period of range-bound trading set the stage for an explosive rally. Volume, a measure of market activity, has started to tick up, signaling renewed interest and participation. Meanwhile, technical indicators like the Relative Strength Index, or RSI, are bouncing from oversold levels. This is often an early sign that buyers are stepping in, absorbing supply and pushing prices higher. Taken together, these factors suggest that the market may have just completed its consolidation phase, setting the stage for a potential breakout. Of course, it's not just technicals and seasonality in play. July is packed with key dates and events that could inject volatility and opportunity into the market. Let's run through the calendar. On July 4th, a $4 trillion stimulus bill is set to be signed in the United States. This massive injection of liquidity could stoke inflation fears, traditionally bullish for Bitcoin, which is often seen as a hedge against currency debasement. When new money floods the system, hard assets like Bitcoin tend to benefit as investors seek protection from eroding purchasing power. July 9th brings the deadline for a major U.S. trade deal. Depending on how negotiations unfold, this could trigger market volatility. Trade tensions, tariffs, or unexpected resolutions can all impact risk sentiment, and crypto often reacts swiftly to such macroeconomic developments. Between July 15th and 20th, key inflation data will be released, including the Consumer Price Index, CPI, and Personal Consumption Expenditures, PCE. These reports are closely watched by investors, as they provide insight into the Federal Reserve's next moves. Higher than expected inflation could reinforce the bullish case for Bitcoin, while lower readings might temper enthusiasm. Finally, on July 31st, the Federal Reserve meets to decide on interest rates. Current expectations suggest that there will be no hike, leaving room for risk assets to grow. A pause or dovish tone from the Fed could further fuel bullish sentiment in both stocks and crypto. With so many moving parts, how should investors approach the market? The truth is, no one can perfectly time the top or bottom. Chasing quick gains often leads to costly mistakes. Instead, savvy investors focus on strategy and discipline. The most effective approach, especially in the context of the 4-year cycle, is to accumulate during periods of consolidation. When prices are range-bound and sentiment is muted, opportunities abound for those willing to be patient. As the rally unfolds, consider selling portions of your holdings to lock in gains and manage risk. But don't be too quick to exit entirely. Holding a core position into the late stages of the cycle can lead to outsized returns as the bull run matures. It's important to remember that true wealth in crypto is built across multiple cycles, not from a single moonshot. Those who survived the corrections of 2013, 2017, and 2021 and continued to invest strategically are the ones who have consistently outperformed. The power of compounding, combined with disciplined risk management, is the real secret to success. Looking further ahead, what does the long-term forecast suggest? Some analysts are turning to the power law projection, a mathematical model that has accurately mapped Bitcoin's exponential growth over the past decade. According to this model, the coming years could see even more dramatic price appreciation. For 2025, the projection points to a range between $100,000 and $180,000 for Bitcoin, a level that seemed unthinkable just a few years ago but now feels within reach. After that, the model anticipates a market cool-off during 2026 and 2027, as the cycle matures and speculative excess is wrung out. But the story doesn't end there. By 2030 and beyond, the stage could be set for a new bull run, driven by mainstream adoption, institutional investment, and continued monetary expansion. If the power law holds, the most eye-catching prediction is for 2034, a potential $1 million price tag for a single Bitcoin. While it's impossible to guarantee such outcomes, the historical track record of exponential growth and supply-driven scarcity gives these forecasts a basis in reality. Of course, the journey will be marked by volatility, corrections, and periods of doubt. But those are the hallmarks of every major technological revolution. So, as July unfolds, the question isn't just whether crypto will explode, but whether you're prepared to take advantage of what could be a generational opportunity. Are you mentally, strategically, and financially ready for what comes next? The temptation to chase FOMO is strong, but the greatest gains go to those who invest wisely, with a clear plan and a long-term perspective. As the new cycle takes shape, remember to stay grounded in your strategy. Accumulate during quiet times. Take profits during rallies. Hold a core position for the long haul. And above all, never risk more than you can afford to lose. The crypto market rewards patience, discipline, and resilience. If you've found value in these insights, now is the time to take action. Strengthen your knowledge, sharpen your strategy, and connect with others who share your vision for the future. The months ahead could redefine what's possible, not just for Bitcoin and crypto, but for the entire world of finance. July could be the month everything changes. Will you be ready when it does? Don't let FOMO cloud your judgment, and don't let fear hold you back. Invest wisely, stay informed, and keep your eyes on the long-term horizon. The next chapter in the crypto story is being written right now. Make sure you're a part of it.